Recently, we saw a pretty volatile pullback in the SPY, but we were able to catch some positivity from that. And I'm glad we're paying attention to the structure down here on the shorter time frames. But in this video, we're going to be looking at the bigger time frames. And even though we do have some more of that consolidated pullback, and it looks like we're getting a break to the upside, it doesn't mean there aren't risks out there. And if you still, maybe even as an investor, think that there's no risk in this market right now, even going into early on this week, well, then I'd encourage you to see what possibly the best or the LeBron James of investing is doing. And as of right now, showing this report, Berkshire Hathaway exits S&P 500 ETFs, lightens holdings in 3 banks among Q4 trades. Now, the thing about that is, one of the things that he lightened that in was VU. The other thing was the SPY. So if this is going to be some kind of massive bull run that's going to keep going for the next few years, you think this is some kind of massive breakout, well then why is the best investor of all time saying, I'm not willing to hold the SPY? Let's get into some stuff today. So it's important to keep the bigger picture in mind, and I think that really helps us just by doing a quick review of a weekly chart for the SPY. And we notice that the weekly chart has still had that divergence confirmed, but we're breaking out to a new level. So what's one thing that we can pretty much be pretty sure on over the next couple of weeks is if this does curl up, I believe it will be a very lackluster or some kind of sporadic, maybe. It might not be lackluster, it might be a quick move, but I think we will be able to get to, and this is where it's really good because we can pay attention to our monthly expected moves. So really what I think is, which direction are we really pointing to? Well, we built up and we could see that little A, B, C kind of move to get to something like 624.28, which means all of this would say the topside monthly expected move. And that's what's really great about having that. And then we can watch for those signals to confirm downward in that direction. But I just want you to keep the bigger picture in mind that the S&P 500 is getting really, really tight. You had one of the best investors of all time sell out of, I believe, all of his holdings in the SPY and VU. So this is suggesting that even if all that news is there, this can still head in the upward direction, but I highly believe that we are going to run into a trap very, very soon. I think it'll be possibly even in the next couple of weeks. So that's something I want to pay attention to. Now, why could all of this be taking place? Well, we did see this crazy kind of reaction from the 10-year yield, and you notice the weekly chart about to curl down. So this is very interesting to me. This almost seems to me like, remember what we've been talking about a lot lately is bonds in general have been like, we need to fight inflation, we need to fight inflation, we need to fight inflation. Comes back down and then they get the data and they are correct to do this with the data, right? Say, yeah, we've got to fight inflation. And then all of a sudden it just starts to break down. And I think this is something very interesting because if this would have confirmed up, we would have seen extremely higher levels, I think, of the 10-year yield. I think we would have went to 5%, and that could have caused some things to break in the system. Did it already break? We'll find those things out. This isn't cutting down the low or anything like that. We'll still pay attention if it turns around, but I want to be aware if the yields are coming down dramatically and people are celebrating that. Why? Because technically we do like the yields coming down when inflation is the topic, but we don't necessarily like that if recession is the topic. If we are seeing this go down rather quickly and the Fed maybe jumps behind that and is forced to cut in some way, this could really pile on and say, hey, why is this dropping so fast? It's probably because people are worried about a big recession, okay? So that's the indicator I want to watch. When people start to forget about inflation, realize, oh my gosh, we are going into recession, and recession happens to be a deflationary event, which is fantastic because that should take care of inflation as well. The other thing that's kind of tipping us off is the dollar. The dollar is very interesting. Now, we did talk very briefly about the dollar, how it did originally in the, say, 2021, 2022 top. Originally, the dollar came down with the market at first. So this is actually going down while the market's up. Very interesting. But I just want to see if the dollar whips back around. Okay. So at the end of it all, during 2021 to 2022, you saw the dollar and the market go down at the same time. You saw a small bounce from the market, and then the dollar started to go rapidly in that direction, and the market just completely failed. So this is something I'm really watching for. I'm watching for if the dollar does turn up at any time, that would suggest people moving further into cash. But I know that based on some previous behavior in history, we can see the dollar come down while the market comes down first. So that's what I'll be watching for this, but mainly seeing when that turns back around, because that ended up being a bigger flush in the market. So we have some things to be watching here, right? We have some looming risks out there, and now we can maybe go look at the SPY, look at our monthly and weekly expected moves, and we'll give you those weekly expected moves tomorrow. But all of these things can really help us in dictating, like, hey, how much risk do I want to assume going into the next 2 weeks when we're showing some very scary things? So I've seen a lot of people calling out things like 610, things like 620, things like 630, things like 650, all the way up there. But we have something that a lot of other channels don't, and we calculate the options data to tell us, hey, how far up or down are we pricing in with the options, right? With actual money, with people placing their real bets. How high or low would the SPY go this month? And that is what we have in yellow here. So something we'll be watching for is 624.28. Now it's important to note this is a 68% zone, so you do have a 32% chance to land outside of that by the end of the month, by the close of that monthly bar. But right now we're pointing in that upward direction, so we do want to pay attention to this move heading to the upside. We don't have to get all the way there. We don't have to stop right when we get there. We can go higher, so that's where it'll be important to tune in for Sunday's video so we can keep watching those shorter time frames with you. You can get daily expected moves, and we try to put out a ton of values to really help your trading throughout the week, including updated weekly expected moves. But right now you're pointing in the upward direction, so you would lean towards this. The risk that I want to be aware of at all times, I mean, Warren Buffett's selling everything in the SPY should at least convince you, like, hey, things can be a little risky. I'm still going to trust my charts and see those heading upward directions if things are confirmed up. But if this confirms down right away, if we start to see a flush kind of move right away, that will be a big problem if we're able to cross over on this MACD. So that is the risky thing I'm aware of. Most of the probabilities are still pointing in this direction, but if we see that sell come in and we cross over on this, you will be confirming divergence on the MACD, you will be confirming divergence on the RSI at the same exact time, and that's why you have to be aware of it. But as of right now, we could be making that next move to go a little bit higher, and that's where we'll target 624.28 and look for reversals around that area. Now, for the Qs, this is pretty important because we're about to possibly even go make a new all-time high. Now, if we go make that new all-time high, I will be leaning more towards a correction that is able to scoop up later on. Now, we'll see if I'm right about that. I just want to see how it behaves. But the big thing is, I'm not just saying like, oh, I see this, so therefore I know that this is the most probable thing. No, I just want to be open to it for the most part. If we go like this, then we experience something bad, but you see a 2-hour divergence like that, hey, that can turn right back up. So I just want to make sure that everyone knows, like, we're trading like water here. We're not really, really bearish. We're not really, really bullish. Right now, we're just following the price action and saying, yeah, this is a bullish move for the Qs. It's curled up on the daily. This can turn up and go to something like 544.72, and that's our monthly expected move. So I highly encourage you get these yellow lines on your chart. This is your 68% zone for the Qs, 32% to land outside of that. But it gives you a hard line to pay attention to with data to back it. That's why it's great. If you want these for individual stocks that we cover on this channel and pretty much the whole list on the right side of your screen and some more, you can get that by joining the Patreon. It's down in the link in the description. It's only $7. Try it out for a month. Like everyone that ends up trying it, they're all skeptical for a second. Whoever's skeptical about it, whenever they end up trying it, they always come back into the chat and they go, holy crap, this has completely changed my trading. It will really help you out having these little data points. And we do give them out for the SPY and the Qs for free on this channel every single month. And we give the weekly expected move for the SPY and the Qs every single week. So if you want to test them out for a little bit, you can stick around with this channel, make sure you're subscribed and see if there's anything that happens around a weekly and see if you can learn a little bit about these weekly expected moves and monthly ones. But as of right now, targeting the upside. So what does this weekly look like? Well, this weekly still has all the divergence points, and notice that the Qs are getting weaker and weaker and weaker. So either way this shapes up, even if we go a little bit higher, we can extend that for quite some time. We still want to pay attention if this is going to extend. But right now, our monthly expected move would say that's really not the most probable thing. The most probable thing is you are going to run into problems around 544.72, maybe even 550 or 550 because it's a whole number. But this would say even if this curls up, it's has a high probability to be very, very brief. And next week is a shortened trading week, right? There's light volume, so they can really do some funky stuff with stocks during those times because there's not a lot of volume, so they can manipulate how they want. They have a lesser time having to risk money to manipulate stocks. So if they wanted to manipulate you into taking calls before something bad happened, well, next week would be the perfect week to see some kind of like big upward move that gets people very, very bullish. So we'll be watching for it. Sorry, I'm hiccuping, but I just want you to keep in mind still that there is weekly divergence all across this thing, and you have super high up monthly charts suggesting we at least need some kind of correction, I would say, of more than 10% in 2025. And if that happens to be a crash, hey, that's awesome. We were paying attention to the signals. As of right now with volatility, you are turned down. I don't know why I just drew something, but you are turned down on the daily chart. Okay, you are turned down. You are going negative. You were not able to confirm that back up. Now, we did talk about that 1504 and we're still right at it. So something that you're going to want to be aware of. We're going to talk about it more tomorrow. So make sure you're subscribed. But volatility still holding this signal on the 2-hour. If we see something bad right away in the week, that would be kind of a random occurrence. I don't think you have the greatest divergences here on the shorter time frames. We'll look deeper into that tomorrow, but if this 2-hour turns up, I think it's worth mentioning twice this weekend. If that 2-hour just turns up right away, you got to be cautious with it. I mean, this thing has technically been coiling up for a while now, and if you see the divergence hold down here and this curls up, that can be a huge issue for stocks. That can mean volatility is coming in strong. So just be aware of that for volatility. One thing I did want to touch on as well was the fact that GME and AMC doing some very interesting things. Now, we're going to update these lines, but I wanted to talk about when AMC or GME close outside of this purple line, because we've talked about it a lot, and usually we see that resistance. See how the fight comes in right as we get to the purple line? That's why that line is important. We will update this tomorrow. So if you're an AMC person, yeah, get a look at it. Now, we see that there is 30-minute divergence here, so just be aware of that. But the big deal here is just what this is, and we're going to go over those shorter time frames on Sunday for this. So right now, when you close outside of this, that means something unexpected happened. Why were we leaning towards something unexpected happening? Well, because people were not pricing that in with implied volatility on GME. You just didn't have the implied volatility that you used to have for a couple of weeks. It was only a couple of weeks. I think it was 2, maybe 3 actually, weeks of very low implied volatility. And what do you see? You start to see big reactions, and that's the thing. When things are expected, the price for GME and AMC, and nothing happens, hey, it's going to be a dead zone, right? Or more sell side, right? But when implied volatility is very low and the stock's just moving in maybe one direction or sideways or whatever, it doesn't matter. But if you get good news during an unexpected time, aka when IV is low, it's a good thing. So this can cause margin calls now. You closed at 355. That's a big deal. You're above the 350. This is what you need to happen again next week, right? We're going to move this line. It might move up a little bit. Maybe it's at 410 or something. And if you can close above that, possibility for more margin calls. It doesn't mean it has to happen, but it is something unexpected. And if an option trader, someone who is short, was taken off guard by this and they had to close those positions, right? That is the worst close I've ever written. But if you have to close those positions, then that means what? Less sell side activity, less pressure to the downside. So if this by any means force someone to sell, we'll see it as of right now with the AMC short, right? The short sale, we can pull this up and just go, okay, there is nothing happening with the short seller activity right now. You don't have covering, you don't have them really suppressing the stock by opening new positions. I just wanted to make that very clear. You do not have that right now. So this move, it does not look like it is someone covering at this moment, because that is the Friday data point. Now, as we go to GME, I think this is great, right? This is great because you closed above 26.39. This is fantastic. This is a great close, $27 on the dot. Obviously, above 28.35 would have been better, but that was my next kind of line in the sand. And you did want to react to this area. I mean, you look at the resistance in that area and you go, okay, awesome. Left head. What if we get that right shoulder, we fill this gap, and then we turn back up, right? This could be very, very close, and this is why we were paying attention down here and in here. while implied volatility was low. Pretty much anywhere in from this point down to this point, we were going, implied volatility is really low. We're looking for some news. We're looking for some news. So we were watching this. It curled up on the daily. It's trying to see something good. It looks like if it wants to build a structure, I'd look for a head and shoulders, but this is something that can cause someone who's shorting, adding short positions down here to cover those positions, right? And if they cover, you can see more positive price action. People were reporting some crazy stuff like GME showing up on platforms, spiking up to $200, spiking up to $1,000. So there's some funky stuff going on with this, and I'm wondering how that's going to affect the market at this point. But one thing that I do think is out there, and the last thing that we will be talking about, is still the JPY. JPY getting some strength here towards the end of the week. Notice it wasn't early on in the week, but we did confirm up this weekly chart, this weekly MACD, with some pressure underneath it. It is still a negative bar, so I want to see how that performs this week. But if those GME or AMC hedge funds actually use the yen carry trade to make those positions and the yen actually starts to go up, that can put some serious pressure on their borrowing costs. That can put some serious pressure on their loan. I mean, it really can, because most of them are variable rate, meaning the rate will change if the JPY has to go up. And we do actually get data from Japan this weekend. If you were not aware, we do get data from Japan this weekend. I believe they give out their GDP on Sunday. I think that's what they're giving out. So their GDP is supposed to go up, right? It was something, now it's supposed to go up. Well, if a GDP goes up and you have inflationary pressures, well, then the yield's going to go up. If the yield goes up, the JPY most likely will go up, and this could be a big problem for stocks going into next week, but it could be a good thing for GME and AMC, which is very interesting to me. So the main takeaway here is we're just aware of the possibility of bad things happening. It does not mean that we can't take bullish trades. I do believe this is a bullish trade setup, right? We can look at this daily chart and just see, hey, okay, we built up to this area. We've made almost like a handle. We kind of did it in the form of possibly a very wonky flag, but we ended up breaking to the upside. So we're paying attention to upside because that is what the charts are saying. But in the background, we have Warren Buffett selling everything. In the background, we have the JPY turning up. In the background, we have the 10-year yield dropping off really, really dramatically for almost no reason. So that is very worrisome. It's like the bond traders are reacting for some reason, and then we see the dollar dropping off as well with the 10-year yield, and we're going to look for if that's going to turn around. So there are some looming risks out there. But this is a bullish setup, okay? So now you know the risk and you're paying attention to if something goes wrong or if maybe a short setup is there. So you do have a line to pay attention to, 624.28 for now. If we start to turn the downward direction, hey, 580 is what we're really watching, 579.36. So if we just keep it with a level head, we pay attention to our signals, we're always willing to trade like water, and we don't try to get too much info. We're just looking for those 5 reasons to take a trade. We will be just fine, and that's the big thing. If we see these signals and they turn down, and it wants to be a correction, we're going to react. If we see these signals and they turn down and it's more than a correction, we see this thing really plummet, awesome. We'll be able to make a little bit more money on that move. That's the only way we want to treat it, and we want to continue to trade like water. Thank you guys so much for watching this video. I really do appreciate it. You guys are fantastic for pulling it up on a Saturday and wanting to look at some charts. I hope that you found something in this video overall helpful, but overall, guys, thank you so much for being a part of this community. I really do appreciate it. My family appreciates it. I mean, you guys have made trading for me a lot more fun and very nice to not have to just sit quietly and trade stocks. It's very nice to have a community of people to bounce your ideas off of. So thank you for that. I hope you guys have a great weekend, and I will see you guys tomorrow. Peace out.